Welcome to The Explainer. Today, we're taking a close look at Simon Property Group. You know, everyone's always talking about the future of retail, right? Well, the real question is, how is a real estate giant like Simon not just getting by, but actually engineering some pretty serious returns for investors? Let's dig into their financial game plan.
And let's start with the number that really matters to investors, 4.8%. That's the year-over-year increase in Simon's quarterly dividend. Now, in this market, a number like that isn't just a good sign. It's a huge statement about their financial strength and a real commitment to shareholder value.
So, how in the world do they deliver that 4.8% growth? Well, that's what we're here to unpack. We're going to break down their entire strategy, from the bedrock of their portfolio all the way to their big, ambitious vision for the future.
Okay, first things first, let's talk about the foundation. Before we get into all the cool, innovative stuff, you have to understand the core of their portfolio, the thing that makes everything else even possible.
This quote right here, it really says it all. Their strategy isn't about chasing the latest, hottest trends. No, it's about owning these iconic, super high-quality properties that have proven time and again that they can handle anything thrown at them. Economic cycles, the e-commerce boom, you name it, these places are built to last.
And this isn't just some philosophy they hang on the wall. It's actually showing up in their performance. That solid foundation isn't just holding its own in a tricky market, it's absolutely thriving. Let me show you the proof. For years, all we've heard is the death of the mall story. But if you actually look at Simon's portfolio, it tells a completely different story. Their main retail properties, like these premium outlets, are bustling, vibrant, and incredibly productive centers of commerce. And the data is just undeniable. I mean, a 96.4% occupancy rate across the whole portfolio is amazing. But look at their Mills properties. They're at 99.2%, almost completely full. You pair that with a record-breaking $799 in sales per square foot, and you start to see these aren't just surviving, they're fine-tuned cash flow machines.
But here's the really interesting part. Simon isn't just playing defense with this strong core. They are on the offense, actively future-proofing their portfolio by turning these properties from just shopping centers into these dynamic, hybrid destinations.
And that whole transformation starts with a totally different way of thinking. It's not just about leasing space anymore. It's about handpicking the right mix of tenants to make their centers the place to be for the world's top brands. It's about giving people a reason to get off the couch and show up.
So what does that look like in reality? Well, it means they're aggressively redesigning what a mall even is. Think about it. They're adding things like luxury hotels, apartments, and office spaces, right next to exciting entertainment, great restaurants, and wellness centers. They're creating this whole ecosystem where people can live, work, and play, which means there's always foot traffic.
And here's that strategy in action. This is not your parents' mall. People are coming here to check out the Netflix house, grab dinner at Italy, or take their kids to camp. These are all experience-based tenants, offering something you literally cannot get by clicking a button online. It's a real-world destination.
And this isn't just some small experiment. Simon is putting their money where their mouth is, backing this vision with a redevelopment pipeline of over $4 billion. A huge chunk of that cash is specifically for these mixed-use projects. That tells you it's a major strategic priority.
Okay, so besides transforming their properties here at home, Simon's also growing its footprint all over the world, and they're doing it with a really smart, capital-efficient strategy that's all about maximizing growth while keeping risk low. And it's already paying off in a big way. Their international business is a really important and profitable growth engine for them. It's already kicking in a solid 10% of the entire portfolio's net operating income. It's a key part of their diversification strategy. So what's the secret to their global success? It's the joint venture model. By teaming up with local experts, like Klépierre in Europe, they share the financial risk and get priceless knowledge about the local market. It's what lets them successfully export their proven premium outlets concept all around the globe.
Okay, so we've got a strong core, we've got innovative redevelopment, and we've got smart global expansion. That's the strategy. Now let's connect the dots and see how all of that actually turns into cold, hard cash for investors.
To really get this, we have to talk about a key metric for any real estate company, funds from operations, or FFO. Don't worry, it's pretty simple. You can just think of it as the core cash flow that the properties themselves are generating.
And this is where it all comes together. That strong FFO performance is what directly fuels the returns for shareholders. You can see the result right here on this chart, just steady, predictable year-over-year growth in the dividends they pay out. That's the strategy paying off, plain and simple.
You can really distill their entire investment thesis down to this simple equation. You take a dominant, nearly full-core portfolio, add in some high-yield redevelopment projects, and sprinkle in profitable international joint ventures. What do you get? A powerful 4.7% increase in portfolio net operating income. And that is the engine that drives FFO and, ultimately, those growing dividends.
So, what does this all add up to? Let's zoom out and pull all these threads together to see the complete, forward-looking investment case for Simon Property Group.
The big takeaway here is this powerful, multi-layered growth strategy. Think of it like a tree. The deep roots are the stable, cash-generating core business, and the branches reaching for the sky are the future growth drivers, those innovative redevelopments and the smart global partnerships. It's a model that's built for both stability and for expansion.
Which really leaves us with one final big question for any investor. In a world where the retail landscape is constantly changing, is this balanced, adaptive, hybrid approach the definitive blueprint for creating durable, long-term value in real estate for years to come?